Welcome back to another weekly episode of Wilson's Weekly with Dr. Wilson driving the latest data for September.
Yeah, thanks very much. And here we are again, the week that was. Coming up to some exciting news next week where the Reserve Bank will meet. And just a tip, I think we're going to have rates on hold. But the other interest rate focus that we have over the next week or so will be the US Fed. They will be meeting and plenty of expectation that they will finally cut rates. That expectation has really been, in terms of their market analytics over there in the US, been telling us they're going to cut rates for, the best part of 9 months, but it hasn't happened. But getting it wrong is an art form for the market in the US, but I don't think they care because they're just looking for people to get aboard all the margins that creates. But so we will have, I guess, lots of headlines if the US does cut rates regarding the maybe a follow-on from Australia, but that won't happen because we are extremely different from what the US is experiencing. Their official rates are actually around about 1% higher than where ours are, and yet our inflation rate, given a lower interest rate compared to the US, is about 1% higher. So we've got a lower interest rate and a higher inflation rate. If we follow on, it doesn't make sense in that particular scenario. And of course, the Reserve Bank governor has been pretty circumspect about the outlook for interest rates. In fact, she's been saying don't rule anything in or out. And it's only recently we've seen some improvement in inflation. So look forward to that next week when we will discuss that. But that's next week. And here we are well into spring, 3 weeks into spring. And the spring selling season up and running, certainly, particularly when we look at the auction results, so surge in auction numbers, particularly in Melbourne and Sydney on the weekend. We'll look at those results. And of course, this coming weekend is Super Saturday. Yeah, we're all excited about Super Saturday. Now, Super Saturday is the weekend before the grand finals. And that always, agents always avoid a clash with that big event. So we get a front end loading, I guess you'd say, of auction numbers before the grand final, and that was a little bit what happened last weekend as well. So expect big numbers, and that'll be a challenge for the market to see how buyer depth responds to higher numbers, significantly higher numbers of auctions. But we've got other economic data to look at today, which is very interesting in regard to its reflection on what's happening in the housing market. And of course, that's home loans, and home loans are a very good forward indicator or actual indicator of housing market activity. And we've had another very big month for home lending. We'll look at that data. And also, when we're talking about inflation and interest rates, one of the key factors in our inflation rate are housing costs. And the Reserve Bank, different to the US, they measure housing costs as being in their basket of goods as being a combination of rents, and that's total rents, not just asking rents, and house building costs, not apartments, but house building costs. So the big change that we had in house building costs, the surge that we had following the previous government's home builder stimulus policy, created a lot of demand. We didn't have the supply. Of course, that meant a shortage of building materials and labour, pushed house building costs through the roof, which did contribute significantly to our inflation rate. And we have started to see that easing. So we'll have a look at the latest data. They're important not just for those interested in, the cost of building a new house, but also regarding, our undersupply. We obviously need the most efficient environment for house building on the cost side to get as many new homes as we can get to offset, that oversupply, that undersupply that we have. And also for the interest rate outcomes, which I've just described. So let's get going. Plenty of previews there. So we'll get our deck up and we'll start talking about it. My housing market is my brand, our brand. We do these podcasts in connection with the good folks at Infinity. We're coming up to our 100th podcast. We were a leading podcast, or are a leading podcast in terms of financial services. So thank you for viewing and listening. We try to help with property decision making, and I guess it's a no BS environment here. We say it as it is, no agenda, just using data and analytics to create a picture of what's actually happening in the housing market and likely to happen in the housing market. So we are all about the current state and future prospects of housing markets, particularly the current state. And we use a variety of not just measurement insights such as prices and rents, but also we look at the economic environment and correlating measures as well, so we can give you as much accuracy as possible. So it is the week to Wednesday, September the 11th. Moving ahead quite quickly now. In fact, it's Wednesday, September the 18th. So just forget that first slide. That's an oopsie, but nonetheless, for this week, we will see the July home loan data from the ABS, latest house building costs, and the latest weekend auction results as well. Sort of alluded to all three of those. Big result for home loans over July. A massive increase, 5.2% rise in the value of home lending over the month. Need to take it with just a little grain of salt, this data, because the ABS has conceded that it's had some issues with its home lending data, which comes from the banks and APRA primarily. But nonetheless, the general trend is certainly upwards, and that reflects what we know is happening with prices in the housing market, and they're still rising, which has been a very solid year so far for house price growth in our capital cities, and that's being reflected generally in what we're seeing with home lending. But that's a really big result, 5.2% increase, and now tracking well ahead of where we were a year ago. So even accounting for that increase in house prices, which of course would push up the value of home loans, we're still seeing strong growth overall in home lending activity. When we break it down into buyer types, owner occupiers, generally first home buyers and investors, we can see that even though there's a rise in all three groups there, that investors are really the hotspot for housing home lending at the moment. And why would we be surprised, given strong prices growth, strong rents growth, higher yields, plenty of confidence in the market, particularly from investors who are really marching in force. And the breakdown data emphasises that 12.8% increase in investor activity over July compared to June. That was the strongest of all the buyer groups. First home buyers are also performing quite strongly, and that's also not a surprise given high rents, higher prices, and high prices generally, not just house prices, are motivating first home buyers to get out of the rental market, to get out of home or out of the family home and get their own property. So we're seeing some big rises there. And when we look at the first 7 months of this year compared to the same period last year, we can see investors, that's just a remarkable surge, 30% increase compared to last year at the same time period. Investors first home buyers up 21.1%. And the year on year, that's the full year to July versus the previous full year to July, ending July 23. Investors up 16% and first home buyers up 13.8%. So that does tell us a story of a market that's a heady market, a market where confidence is certainly rising and strong, and particularly from investors and to a lesser degree first home buyers. And when we look at the breakdown of the states with the data, the month first and the year to date, we can see all of the states are recording higher lending over the month, and significantly higher lending over the year to date. No surprise there that Queensland, South Australia and Western Australia, particularly Western Australia, are leading the charge with very strong home lending. We know that Perth, Adelaide and Brisbane are in the middle of a boom right at the moment, prices growing strongly. And of course that reflects in those high numbers, that high level of home lending that's going on in those three states, but also higher in New South Wales and Victoria. But some very strong results there in those three capital city markets, the states of those capital city markets that are performing very well. And no surprise again, when we look at the breakdown, that Queensland, South Australia and Western Australia are really surging in terms of investor lending. In fact, investor lending in Western Australia is up over 70% this year so far compared to the same period last year, which is a really big number. Queensland's up over 40%, and South Australia up by just under 40% over the year to July versus the same period last year. So again, validating just how strong the buyer demand for property in Perth, Adelaide and Brisbane at the moment, and that's obviously generating a significant rise in home lending. What we do here is compare, just to re-emphasise our underbuilding environment. We compare lending for established homes versus lending for new housing, and we can see how the lending for new housing has really fallen away compared to lending for established properties. And that's just another reflection of the difficulty high house prices, high house building costs are having in terms of on demand for new housing. And that again is just reinforcing the undersupply that we have for housing in this country, where we don't have enough homes for the demand. And when we put that together as a proportion of new housing as a proportion of established home lending, we can see that it's still tracking downwards in actually very low levels at just 19.2% as a proportion of lending. So just re-emphasising just how tough it is to get new property into the marketplace now, and that's reflected not just with our building approval data, but also with the lending for new housing falling away. And just another interesting a measure we get from our home lending data, and that's affordability. So this is the My Housing Market Affordability Index over the July quarter, and this measures the proportion of the average income that the average repayment for the average loan, if you understand what I mean, is. And no surprise there that Western Australia is, and this is what's helping to drive Western Australia, is the affordability advantages that it has, that Perth housing market particularly, of course, compared to the other states and capital cities, because Western Australia has the highest incomes of all the major states, and yet it has still the lowest median house price of the major states. So that means it's highly affordable when we compare those measures, the proportion of the average income that the average loan repayment requires. And that's what's continuing to drive the strength into the Perth housing market, because they can still afford to pay to the limits of what the bank allows them to borrow. And that means there's still plenty of upward potential for that Perth housing market, and we're seeing that with really no sign in end of an easing in prices growth. And also affordability is positive compared to particularly New South Wales with that high price Sydney market, and Victoria in South Australia and Brisbane and Queensland as well. Again, reflecting the potential strength for prices growth still in Brisbane and Adelaide. I mentioned house building costs. Let's have a look at the latest house building cost index. We're still seeing that house building cost index rise overall. So it's higher, obviously, because it's had that surge as a result of the previous government's home builder allowance. But the rate of growth is now starting to ease. It's still a real challenge, because if you think about what you've got to pay to build a new house now compared to what you had to pay a couple of years ago, it's significantly higher. So even though the good news is the rate of growth is starting to decline or ease, the bad news is it's not falling. You know what I mean? It's not getting lower, which we sort of need. But there's no doubt it's heading in the right direction. So at the moment, the annual growth in quarterly house building costs is around 3%. Now that's a lot lower than where it was a year ago, when it was 11.9%, the annual growth. And at its peak in the middle of 2022, it was rising at 22.7% a year. So obviously a big improvement, but it's still rising from high levels, remember. So it's still at the peak of those levels, the prices, but it's now rising by 3% a year on a quarterly, monthly basis, if you know what I mean. And again, that's still, significantly higher than the pre-COVID period. So heading in the right direction. but still a real challenge there for the house building industry, with building costs still from a high base, still rising at what you would call historically high levels going forward. So let's have a look at the latest weekend auction results. We've wished everybody a happy spring over the last couple of weekends, because officially we are in the spring selling season. We've certainly seen signs of that for over a month now in our auction results, with higher listings coming through. Markets are standing up pretty well, as they have really throughout winter. It's been a very positive winter selling season for our capital city markets. Auction numbers have been higher than really we've ever seen before over winter, and auction sales numbers have also been quite high, as clearance rates haven't fallen away. They've maintained their autumn levels by and large. So latest results, we did see a listing surge in Sydney and Melbourne, and that did test buyer depth. Clearance rates were a little bit lower in some of the capitals, but we will see that Super Saturday next weekend. So that's the big test. That's the big early spring test for our housing markets. We'll get certainly a big increase in auction numbers. Watch out for Melbourne. They'll have 1,400 or 1,500 auctions likely. So we'll see how Melbourne goes, and the other states likewise will also see higher numbers of properties going under the hammer. But the market's still remarkably resilient. 900 auctions in Sydney last weekend. Clearance rates down a little bit, still hovering around about that 70% mark. But those auctions were well ahead of the previous weekend. 792 auctions the previous weekend versus 908 last weekend. And auction numbers, as usual, well ahead of where they were over the same weekend last year. And what's interesting now is that clearance rates are getting very close to the numbers that we had a year ago. You've got to understand, we were just coming to the end of a very strong period of growth in that recovery market over the first half of last year. So now we're starting to see a matching of clearance rates now versus the same period last year, which is a good sign for the market, because we've got more listings and yet similar clearance rates. That means more sales, and that means the market's still quite actively engaged, both buyers and sellers. Melbourne, big leap in auction numbers in Melbourne. That'll be up by hundreds more next weekend. 1,129 auctions conducted in Melbourne last weekend. That was up on the previous weekend, well ahead of the previous weekend, a couple of hundred more auctions. Clearance rate down a little bit in Melbourne, 64.6%, down a little bit from the previous weekend, again indicating the buyer depth was tested to some degree, but not far away from the 66.9% of the previous weekend. And again, as I said, similar to Sydney, the clearance rate is now in Melbourne pretty similar to where it was a year ago. And yet you look at the difference in the number of auctions. There's nearly 300 more auctions conducted in Melbourne last weekend compared to the same weekend a year ago. So that means a lot more sales occurring when we look at the clearance rate versus the number of auctions compared to the same weekend last year. And again, similar to Sydney, that was the peak of a very strong period in the marketplace for all the capital cities. Brisbane's just been off the boil a little bit the last couple of weekends, under 50% there. Auction numbers down. We need to keep an eye on that Brisbane market. We know prices are still growing strongly there, but maybe a bit of buyer fatigue happening, moving under 50%. 50% is always what we use as a benchmark as a positive result for Brisbane. Again, their clearance rate, or their auction numbers are higher, but their clearance rate is well down on where it was a year ago. And that was that amazing boom market that we had in Brisbane, which is still really carrying on, even though these auction clearance rates have been a little lower over the last 2 weekends. The latest price data is still very positive for the Brisbane market. Adelaide, similarly, up with auction numbers, clearance rate down a little bit. And even though auction numbers are well ahead of where they were the same weekend last year, clearance rates are down, but still look a strong result there for sellers over 70%. And after a couple of strangely weak weekends in Canberra sort of regathered its energy, pushing up more to that 60% results we were getting through most of August for Canberra. and similar to where it was a year ago. So we can see that sort of spring energy. This is an interesting time of the year when we do see a lot of activity coming into the market. It peaks in the pre Super Saturday weekend, the pre-grand final Super Saturday weekend. And of course, it is the beginning of school holidays as well. That's another factor that we see higher auction numbers prior to the start of school holidays. So that just adds to the distraction of our Super Saturday. And of course, in Melbourne, it's a public holiday, not this weekend, but the following weekend as well. So it sort of all adds up to that surge that we'll see this weekend. So it will test buyer depth. So it'll be interesting to see our results, to see if our early spring housing markets continue to provide reasonably positive results, particularly after what's been a very strong 18 months or more in terms of housing market activity, despite those higher interest rates. So this is the Sydney trend, a little bit lower than a year ago, but still holding above 70%. But as we've said, there's significantly higher listings, so that means higher sales with those reasonable clearance rates. Melbourne's still tracking over September so far in its highest results for around about 6 months. So, but we are looking for a little bit of an uptick in that Melbourne market. Next weekend will certainly give us an indication of whether we can expect a stronger spring selling season in Melbourne. But it has all been about the weaker upper end of the market in Melbourne that's been holding the market generally lower than the other major capitals. So, and really no signs yet that the inner suburban properties in Melbourne, the higher priced properties, are set to take off. We're still seeing some reasonably subdued results, which we shouldn't be seeing at this time of the year in the inner east, inner south, and the inner city. So watch out for that over coming weekends to see if we can get a lift there. But other parts of that Melbourne market, other regions, mid-price and lower price regions, are still doing pretty well. Brisbane, a little bit lower so far in September. As I said, we need to keep a bit of an eye on what's happening in Brisbane. Other measures are certainly still remain positive, but Brisbane has slipped down now below 50%. Adelaide's still Australia's strongest auction market with clearance rates, again lower than those remarkable 80% plus that we were getting consistently in Adelaide a year ago. And the Canberra market, after a really good April for Canberra, where it did look like it was on the road to recovery. It's a bit like 2 steps forward and 1 step back for Canberra at the moment. We'll just see if it can pick up over the coming weekends and get back to that 60% plus vibe. But certainly has been a modest performance by Canberra over the past 12 months, really fell away at the end of last year. And a little bit of a confidence factor, I still think, affecting that Canberra market. Although, as we see some good early signs that it would be starting to recover, it's just, as I said, 2 steps forward, 1 step back a little bit with Canberra. If you're looking for those latest auction results, you can get them on my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. Every Saturday night around about 6:30. I'll give you the headline results, which gives you the clearance rates, the number of auctions, and compares it to the previous weekend and the same weekend last year. If you're looking for a bit more depth in terms of auction results, I have the full national auction report released Sundays, also on LinkedIn, and that's where we give the regional breakdowns for Melbourne and Sydney, also the top 10 sales under the hammer for each of the capital cities on that particular Saturday. So look out for that one. And if you missed that national report, there is a QR code if you're looking at the screen, which you can grab your camera, take a picture of the QR code, and that will send you to the latest national auction report for last weekend. And just finishing off with our plug for the app. This is the Infinity My Housing Market Suburb Data app. It gives you insights into every suburb in Australia that has data. You have to have a password, and the password, you get that through Infinity. There's a QR code and the link to that particular app. It's a great little app. You can put it on your phone. It tells you exactly what asking prices and asking rents are in every city in a real-time basis, updated every day. And it's just handy if you're tracking the housing market as a buyer, a seller, a tenant, a landlord, or whatever. It's a good little part of your tool set, your toolkit for understanding what's happening in the housing market here and now. And there's just a screenshot there. You can pick prices or rents. You can filter it for capital cities or the state regions. And there's a suburb we've picked, Blacktown, for New South Wales there. You can filter for house unit or townhouse. And you can also filter for the number of beds. So it gives you a lot of options there to drill down. And there we have a 5-bedroom house in Blacktown. And it gives you not just the median asking price currently, so that's what vendors are pitching in terms of what they think is going to happen in the market, but also the high and the low. So you know the margins there, what's the top price being asked and what's the bottom price being asked, and the median price of all the asking prices, and also gives you the number of listings. So it tells you how much competition there is in the market. So that's a screenshot for Blacktown for prices, and we've got exactly the same there for rents. You can see the same breakdowns, the median rent, the high rent, and the low rent, and the number of properties currently listed for sale. Look out for our update of our app coming through soon, which will have a lot more information, yields, vacancy rates, etc. And we're also producing an app that will let you see where the sales have been in each of the capital cities this year so far, in each of the suburbs, this year so far. So you can pick a suburb and it'll tell you what's been sold there over the first part of this year, over the previous 6 months. So some more insights from My Housing Market and Infinity, just to help you making your property decisions. And as I said, we're a non-BS site here. We look to provide good analytics to give you a reliable sense of what's happening in the housing market. So next week we have the labour market data, which will be interesting. We've had a little bit of an easing in the unemployment rate. It's now at 4.2%. We were used to those mid-3s a year ago, which was clearly unsustainable because they were record lows, really. But let's see if that unemployment rate continues to rise. It'll give the RBA something to think about if it does. But because we have the September interest rate decision next week also. So we'll have a lot to discuss in terms of that. And as usual, we'll have the latest weekend auction results. So if you want a full copy of the report, today's report, there is the QR code, and you can get a PDF copy of the report and all its insights. So that's me for this week. We're heading towards our 100th episode. Woohoo! Balloons, streamers, party pies, the whole thing.
Mate.
So I look forward to that. Yeah, and in a couple of weeks' time. But it's been another big week of information, and that's what we're doing here is just sort of putting the jigsaw puzzle together with all the pieces week by week, and we come out with the latest data as it's occurring, sometimes on the day as it's released, and that's what will happen next week when we will see the inflation rate the interest rate the day after it's announced, and that should be quite interesting. And we'll look at the commentary from the Reserve Bank, and it'll certainly be interesting in relation to the prospect that the US are going to cut rates next week or this week, I think, when their meeting is. But nonetheless, that'll be a big change for them. But as I explained to begin with, it doesn't necessarily mean that we will follow, although I'm sure there'll be plenty of clamoring in the media for us to follow the US with a cut with interest rates. And hey, we all want to cut in interest rates, but we don't want to be cutting rates and then having to raise them again. That would be the worst possible outcome. So thank you very much for this week, and I look forward to another big week next week in the Wilson Weekly with Infinity.
Thanks, Doc, as always, mate. Really appreciate your time, and looking forward to speaking with you next week, mate.
Thank you very much, and adios.
Take care, mate.